Hello everyone, and thanks for joining the course. Today we are going to discuss what we have in our homework 3, and we are going to practice some problems, accounting problems relevant to the homework 3. And maybe if you come up with some questions regarding homework 2 or maybe even homework 1, we can also cover that. And I have a special announcement. I see that a few people who were doing homework on time are probably struggling with the homework too. That's why I offer that we can chat for 30 minutes. You can message me and we can chat on the phone or on the messenger or via Telegram or any other means. We can chat and discuss in one-on-one settings what are the problems you are actually facing. I'm doing that just to have as many people as I can on a track for the course and see that people are getting value. And if you just started with the course and it's probably a bit kind of complicated already, and maybe you cannot follow through everything or the structure seems too complex for you, you can also contact me and I will give you links where to start, what to do, and we can also have a chat. That way I can also learn what your struggles are and what questions I need to explain better. Okay, so I've just distributed homework 1. It's here. I'm doing everything to make it as easy as I can for you. I'm providing links online. So in the homework 1, I am asking you to create 5 new entries for your business and map them to new accounting period 2. You can also remap some of the entries from period 1. That's your choice. You just need to have several entries here. Then, using SUMIFS function, you can create like a periodic trial balance and periodic income statement in the future. So far, we only do 2 periods, but later we will work on several more periods, just to give you a feeling how month-to-month accounting routine looks like. During this week, regarding QUICKBOOKS practice, during this week I will make several instructional videos with QUICKBOOKS entries. And I will send those videos along with the problem which you can adapt for your business or which you can just post to the QUICKBOOKS as it is. So QUICKBOOKS, the using of QUICKBOOKS, it's not like a brain exercise. It is like a hand exercise. And the only way to learn QUICKBOOK good enough is to practice as many entries as you can. So it's just a hand exercise. Sorry, my hands are a bit black after walnuts. So I will do that during the week, and I will see if I get any traction with that approach, because it looks like if I give you kind of a complex homework, it's just scary some people that the volume of work seems a bit high. So I try to spread it over the week, and I will also help to practice. I will help with these problems during the Q&A. A fourth task. If you remember on the previous homework, we have a task to make an tax memo. We will still work on that tax memo on the next homework and till the end of the course. And in addition to that tax memo, we will also, tax accounting memo, we will also create revenue recognition accounting memo. In that memo, we will research the revenue recognition guidance. We will research revenue recognition guidance. And we try to apply the guidance to a pretty complex revenue engagement. That engagement, that contract will be a complex SaaS service. As part of the task, so what you will be working on that task, we together will be working on that task during the till the end of the course. And so far, you need to look into that article, which states several examples, which provides several examples of the situations. And you will notice that there are terms that are not familiar to you if you didn't read that guidance already. So mostly you can start where it is. You can start with 5-step revenue recognition. I will be making a content on these steps, so you will learn that during the time. What I want you to do initially is to look into that article. Maybe you can print it out and start and just highlight the concepts which are not familiar for you. And we will work on that. Ideally, if you print the article and you highlight the concepts, and ideally, I ask you to send me the highlighted concepts. I will even modify that homework. Revenue recognition. We'll try to make an accounting memo regarding revenue recognition. Currently, you can read an example of the memo. Please highlight concepts which are not familiar to you and share with me or via chat email. So that way, if you highlight what is it, maybe you don't know what a software, SaaS, software as a service is. Maybe you don't know what is a life cycle. Maybe you don't know what is 5-step revenue recognition framework. I don't know what you don't know. Everyone comes with some insights to the course, with some previous knowledge. And SaaS itself and revenue recognition in SaaS is pretty complex topic. That's why we will be trying to cover it over several modules, and hopefully that will give you some comfort with going back and forth in the revenue recognition guide. It's tricky, it's not easy, it's not straightforward, but the only way you can fail it is by either not doing it or by not asking questions and giving up. So I advise you to invest some of your time in that research. Of course, we will do it together, and you can kind of not work much on it, and at the end I will give you some example of the answer, but that's not the target of the course. The target is that you can kind of get the problem and you can find the guidance, and then you can do some, maybe it's not the best research, if you are an entry-level accountant, you are not expected to get like perfect research from the first sight. But at least if you get a task like that, the best practice on the work is to do some preliminary research, make some memo with your findings, and present that memo to a more senior colleague to have something to discuss. You just don't come to the senior colleague and tells him, okay, I don't know what to do with that, give me guidance, give me all the links, give me like template or whatever. It's not, I would say it. Okay, do you hear me? Do you hear me? Is there a sound? Okay, I will change the picture. Let me know if you hear me. Okay, it looks like we are back to live. Okay, we were talking about work behavior. Just give me a second. I will try to fix my small camera, a web camera. So that you can see that I'm still here. Let me see if it works. Doesn't look like it works. It kind of stopped. Okay, we can continue without my camera. So the conversation was that on your work environment, in your profession, when you get some task or if you face some issue or accounting problem, it is considered a best practice to research it first by yourself and present your supervisor or boss or client with the solutions which you have and follow-up questions. And it's considered not a sign of good performance to just when you face some problems, you don't do no research and just run to your boss or supervisor or other colleagues and ask them what to do with it. So the reason of that project will be a kind of make you accustomed to complex guidance. And again, I see that not many people doing the homework, and if I can help, and if we can chat 15, 20, 30 minutes, I am willing to do that. I want to understand what your struggles are, and if I can help them, and if I can produce better material to better help you. Okay. And the last tasks, it was from today's exercise. We take a look at T accounts. T accounts is, in my view, somewhere like a thing of the past. However, it might be a good learning exercise if you are not familiar with debits and credits. You might still want to do that. So if you struggle with debits and credits, you can do that part as of your homework. Just draw at T accounts. I have my drawings from the morning here. It's not the best. It's not the best drawing, honestly. I will hide that one. I will probably keep that one. So T account is when you kind of present your account as a T, and you have debits on the left, credits on the right. So for example, for rent expense, you record rent, you pay during the month here, you calculate the total, and then you close that account. And that account closure, let me actually, okay, paint. I probably need to find a better tag. So for example, let's see. Let me just cut it off here to create some space. Okay, brush. So that entry, assuming we paid rent by cash, that will be debit rent 800, credit cash 800. Oops, sorry, 800. Not the best artist here. And same with 400. But when we say that we close that account for 1200, we usually do not actually do an entry. And that 1200, it just goes to balance sheet retained earnings account. But we do not do a special separate entry for that. We do not do what that would be, credit, rent, debit, retained earnings, 1200. So we do not do that. It kind of in the system, in the QuickBooks, it closes automatically. You do not need to make a separate entry for that closure. You need, when you make that expense, you need that expense to be reflected in your retained earnings on your balance sheet. And let's take a look one last time at these entries. So obviously my balance sheet doesn't balance because I generated a bunch of transactions. And on my trial balance, you see, I have a net profit of 13,400. And it doesn't balance. It should balance. Sorry, I need to invest some time and fix my transactions. But if you see in the balance sheet mapping, we map all the income statement accounts to retained earnings. So basically that's where we are doing the closure of the T accounts. So that's why we do not do that entry separately. It is kind of closes automatically. And same happens in QuickBooks. So in QuickBooks, it also calculates everything to yourself. So our spreadsheet here is a best approximation to what happens in QuickBooks financials. So QuickBooks calculated the same way. It's a database inquiry, and it just presents a report based on your database of transactions, and it put your total in your retained earnings. Let me take a quick look. So as you see, my net profit here is 13,400, and that's cumulative. So that includes both period. We will return to period after I finish with that part. Okay, just give me a second. I will. Okay, everything is runs and the stream quality seems good enough. Thank you everyone for coming. Let me notify the chats. Okay, so net profit 13,400. So basically you accumulate net profit in your retained earnings. And when you do a distribution to the owner or dividend, then you will reduce your retained earnings. That's how it works. Okay, so let's go back to the homework. Create 5 entries for your business and map them to new accounting period, period 2. You can also remap some of the entries from period 1. Let's see what we have here. Where is my homework file? I have pretty complicated transaction list already. And okay, let's say that I did this in period 2, so that's kind of a repetition. And let me do more revenue in period 2. Okay, to show you everything, I probably need to fix all my financials. Let's see. We have, if you remember, we use lookup function to fix our financials. So I remove blanks from here. No, not from here. I remove blanks from where I have the numbers. So if we see a number here, that means so I skip cash basis expense because it's kind of complicated item. But let's see. If I have an item here, it means that that account is in trial balance. And if I got an NA, that means that I need to add that account in the trial balance. Okay, we have interest income here and interest receivable. So I go to trial balance and I go probably to trade and other receivables. And I add interest receivable here. And I go to my P&L. And it should all go to retained earnings. And I add interest income here. And of course, I need to copy all my formulas here. So interest receivable still 0. Let's see what other problems we have here. Utility expense. Utility expense, vehicle, let's just change it to equipment. I have that account. Owner's draw, that's an interesting one. Okay, let's fix utility expense first. And so utility expense goes somewhere here. Sorry. Utility expense. And we put it to G&A, assuming that's a non-production utility, some administrative utility. Okay. And the last one is owner's draw. And we can actually enter it here. Owner, oops, sorry, not here. Here, owner's draw. I mean, if you practice, so as you might note, I'm doing that pretty fast. That's because I practiced a lot. So I kind of intuitively understand why my trial balance doesn't balance. So that's 0. So it's still 1500 difference. And that's okay. A part of that is due to no. Okay. So only 2000 difference. Okay, I'm missing some value somewhere. And I do not see it. Now, when I fix it with a like straightforward approach, and I still have some differences, that might be the case because of the let's see. So cash basis shouldn't impact here. So there should be some $2,000 entry, payroll provision, cash, debit, payroll provision. Let's see what I have for payroll provision. Payroll expense, payroll expense. That's interesting. I need to use auto filter here. Oops. Okay, so somehow I have a payroll provision here, and somehow the lookup tests just shows 0 for payroll provision. And I'm surprised we accrued salary. So payroll provision, let's call it accrual. So payroll provision accrual, payroll provision, but that's probably not a payroll provision accrual issue. Let's see if I have it here. Mortgage current. No, payroll provision was 0 anyways. Payroll expense. So that will take some time to figure that out. Oh, I even have a 4,000 difference here. So I might have entries which do not balance. So to find out if my entries balance, I just sum this. I see there is a difference. So I can, for example, select first 50 lines and highlight first 50 lines, and I see that the error is in the first 50 lines. Let's see if it's here. It shows me that the difference is somewhere in the top. Okay, I think equipment acquired for 2,000 under our accounting policy, we treat equipment as expense. So that should be just, let's see, what expense items do I have. So that was equipment, and let's say we will use that equipment for services, and I will just book it to the cost of, I will just create cost of services account, additional account. As you see, not that easy to keep your books balanced. Okay. Trial balance, cost of services. And we credited cash and we debited cost of services. Now it's 0 here on the trial balance and 0 here. Sorry for returning for that item. Let me just hide the camera, it's not working anyways. Let me know if that was an interesting experience balancing the balance sheet again. Now my balance doesn't balance. Okay, so what can be at fault here? That's because of the owner's draw. Okay, now it balances. So what happened? We generated net profit here, 10,800, and we did owner's draw, 5,000. So our retained earnings, in theory, let's check if, okay, we actually generated a bit different profit because I didn't fix the formula. Okay, so here and here 6,300, and here retained earnings 6,300. So that's how you kind of close retained earnings. You take your cumulative retained earnings over all of the time, or you might just sum up the periods. Let's see if our periods work correctly. And obviously they don't. We have only 4,900 profit here, while we have 11,000 profit here. And the issue here is pretty clear. That's because we didn't map enough transactions. Let me go through the end. Okay, let's see. I'm still off by 500, and that's because I need to fix the formula here. Yeah, 1130. So basically here was we booked to the period 1. Here is what we booked to the period 2. And for example, if we look into the cash accounts, when we close cash accounts to the retained earnings, and we got some number here. That number is basically profit for the period here. And with the help of these functions, with the help of that mapping, with the help of SUMIF, it goes to retained earnings here. We will work a bit more on that because currently we have trial balance, which is cumulative for all time. Later we will build period 1 trial balance. We will kind of simulate month end closure, but that will be a bit later. So how do you build your periods in your Excel file? First, you make sure that you have zeros here and here in the trial balance and in the transaction list. You need to make sure that your mapping works. Then you make sure that you have proper mapping for the accounting period here. So for that reason, I just select only items here. So I do not select blanks. I only select items here, values. Okay. And then I make a mapping for period 2 and period 1. It is more a spreadsheet exercise, not an accounting exercise. Okay. So, and then in trial balance, I add period 1 here, period 2 here. And I use SUMIFS function. I have a separate video on the SUMIFS. SUMIFS. So how I use SUMIFS function? I select a cell on where I want my data to SUMIF, and then I go to the tab where I want my data to get from. I select a column with the numbers. Then I put comma. Then I select the first criteria which I want to choose, and that would be an account. I put in comma, and I go here and select an account. So since let's select revenue products. Okay, and then I put another comma, and I go back to transaction list. I select. Okay, I need to close it. Okay, I got into trouble. I need to put comma. Yeah, that wasn't right. So first I selected accounts and then criteria, and then I selected from transaction list, I selected period, I put in comma, and I selected the period here. Let's see, it says I've got some problems. Okay, I totally forgot to put in SUMIFs. It's Saturday night. Sorry for that. Okay, now I want to be able to copy that formula around to cover all of my data. And if I do that right now, I copy it here and I have 0, and that shouldn't be 0. That's because when I copy it one cell down, that formula goes off one cell down too, and I want it to be fixed. So I go here, and for period I put a $ between the line number here. You probably need to Google a bit more. If you are new to Excel, you probably need to Google a bit more on formulas. So now if I run it down, it will still stick to that row. Now I want to be able to copy it here, and I am getting 0 again. That's because that criteria goes one column off. So now I go back here and I fix the letter here with a $. So for the accounts, I fixed the column because I want the accounts to move down, but I don't want them to move left or right. And for the period, I fixed a row number 2 because I don't want the row number to change, but I still want the columns to change. And that column is right. And oh, okay, we got in trouble. Let's see. Yeah, we totally forgot about our other columns from which we selected the data. So I click F4, or I just put dollar signs for every column on the transaction list, because I do not want those columns to walk around too. So let's see now what we've got, and let's do a quick check. Let's do a quick check. I just deduct from cumulative number, I just deduct 2 period totals. And we get 0. That means that everything works. So with that exercise, we covered that part of the homework where it is. Using SUMIFs, create additional columns on your trial balance and create an income statement for the 2 periods. Okay, where is our income statement? If you got any question, don't forget to post it to the chat. Income statement. Okay, so we need to repeat the same exercise for income statement. And I will do it pretty quickly here. So, okay, so I don't think I will need it again. SUMIFs. So I will use SUMIFs, and I will SUMIF from trial balance account. And I will start with period 2. Let me think a bit. Yeah, that should be period 2, and then comma. Then I need to select criterias. Actually, I will have to run it from, I can actually run it with SUMIF. Let's see if it works. Why do we want to overcomplicate things? So we want this mapping to work. Column B, we want a we want a mapping from column A, and we don't want to change it, so I put a dollar signs here. Then we want everything to go into these based on these criteria. So we select criteria from column A on the trial balance worksheet, and now we need to pick the numbers. And I want to pick the numbers here, and I do not put dollar signs. I do not put dollar signs because I will later copy everything. So I can copy subtotals here and subtotals here, and then I can copy everything here, and it failed. Why it failed? Because I didn't fix the dollar sign here. It didn't work without some dollars. And I want to fix a column B here. Okay. Now let's do a quick check. Oops, not the right check. Yeah, everything worked. Okay, I do not see any questions. Do you hear me okay? Is the sound quality okay? So basically, we prepared the income statement, the periodic, let's call it cumulative. We are working on that to get like as good grasp as we can over that data. We need to have the balance sheet, trial balance sheet, and income statement like on the end of our fingertips. That's how you succeed in accounting profession. Of course, if you are just at the beginning of your accounting journey, you might be wondering why do I need to do that. But even on the job interview, if you go to the job interview and you can kind of describe that you built a trial balance with a list of transactions using sum ifs, and you've built a balance sheet and income statement using some accounting guidance, financial statement disclosure preparation guide from PwC. That might impress some people, because usually it's accounting education is too formalistic and they might give you a limited knowledge of the practical stuff. And that what we are doing here is more like a real life work. Sometimes if you come to some company, they might have all of that automated and they might not work in Excel at all. But currently it's rather an exception, and I would say maybe 95% of employers, they work in some form of the spreadsheets for their data. And of course they also then enter the data into QuickBooks. Okay, let's see what else do we have in the balance sheet. Can anyone give me some transactions to post in QuickBooks? And we will look into how to post it into QuickBooks, or we will do kind of the self-study how to post it to the QuickBooks. If you come up with something, please send it to me. Let me check if someone. I don't see that anyone was doing any homework today. So we already reviewed all the homeworks, which homework 2. Okay, I noted something that I needed to fix. That's actually homework 3. Okay, so QuickBooks is here. Let's make some read of the SaaS issue. So software as a service, it's a kind of what's the best example? So Gmail is software as a service, or Apple Cloud is software as a service, or Google Drive is software as a service. And QuickBooks, even QuickBooks is software as a service. Let's add an example here. So what usual issues you might have if you sell software as a service? For example, you can have setup service price. Let's say it's $5,000. So you charge your customers to set up your software as a service. You might have a subscription price. And that might be, let's $1,200 per year. What else you can get here? You can have support services. Let's say $200 per month. What else? What else can you have here? And let's say it also does QuickBooks plus TurboTax. Let's say we also do tax tax return warranty. And we do not actually know we do not know how much it costs. Let's assume so. And let's say that we bundle price. We do a bundle price. And the bundle price for that will be, let's say 6,000. We kind of give some form of generous discount here. So that's an example. That's an example of SaaS service. Let's now go to the article which I shared with you. What do we have here? Software model has been on a tier, blah blah blah. So they have like a life cycle of a customer here, that we have some implementation which includes training, data conversion, data cleanup. So when you first implement software as a service from some legacy system, you can go through various complications, and that's why we have that setup cost. Then we have an initial term where we might have various fees. We might provide that initial term as a discount just to lure in the customer, just to do some bait and switch scheme. So we might even give them initial term for free. And then we have renewal when they kind of, okay, we implemented, you spend a lot of money on that stage, on setup, and we gave you like a free initial term, and now we want our money back, so we charge you hand and leg for the service, and you won't switch to the other service because a switching cost is pretty high. So that's usually how everything works. And we can read here. Okay, let's go, and you can open that article right now. That will be the last task for today. I remind you that we will do QuickBooks during the week, and with T accounts you can do it optionally, or if you still struggle to understand double entries, you can contact me directly. We can speak. I don't see any issue with that. You don't need to be afraid. No one learned double entries with a kind of a self-study and from the first time. It usually takes several years at university just to understand how to apply those practically. And we've been learning that for like 4 weeks, just 4 weeks. So let's get back to the article. SaaS arrangements. I will not read it out loud, but I will highlight any terms which I think you might need to get an understanding. So renewal. I probably think you understand what renewal is. It's like when you sign up for home internet, and they say, okay, your internet will be $30, Spectrum or AT&T or T-Mobile. And then after 1 year, you get a bill and you see that your internet is now $50. And you call the support and you try to cancel it and re-renew at your old price. So that's how that works. They say here that SaaS services evolve with time, and what worked initially under 606, under revenue guidance, might not work anymore, and you will have to adapt based on the industry evolution, based on the change in the contracts. Let's see. Two related. So they mention here revenue recognition along the customer life cycle. So that's important, because here is the customer life cycle: setup, initial term, renewal term. And basically, if you say that your initial term will cost $0, it will not mean that you will recognize $0 for that initial term. It most likely won't happen. You will have to allocate what you expect to get from the customer. You are expected somehow to allocate that along several terms. Okay. Where we ended up. Customer life cycle. Through a series of examples, this primer demonstrates the application of these insights. The matters addressed in the publication are as follows. Determining the contract term. So contract term, it's usually it should somehow correspond with your customer life cycle, but I think we will find more details later. Evaluating professional services with the SaaS arrangements. That's also an important issue, because you might have, if you have in your contract both SaaS services, so when you pay for Google Drive with Gmail, I don't know if anyone pays, but I don't pay. I just open a new Gmail and get free 15 gigs. But if anyone pays for the Google Drive, the SaaS service is your payment for the Google Drive. But in theory, there might be some additional services included, like some guy will kind of connect to your computer and set everything up, and that might cost you some money. And if that happens, we need to separate these components in the contract. Applying the series guidance. So series guidance, we will learn about that later. Series guidance is just some part of the guidance of ASC 606. Usage-based pricing. So in theory, if your software as a service is some calculating capacity, or maybe, I don't know, Bitcoin mining capacity, and you sell that service and you charge based on some, I don't know, server hours or gigabyte traffic or something like that. So you do not charge monthly, like a fixed monthly fee, you charge some usage base. So that will also be covered in the example. Optional purchases. Sometimes when we do SaaS, we get a pretty good client database which can be used to upsell some other stuff, and that stuff can be like an optional purchase on the contract. And we kind of, when we imagine when you have all of that stuff in your contract proposition, but at the end of your contract you have only like one number, $100,000 for a lot of stuff, and some of that stuff is over the life of the project, some of that stuff happens at the beginning of the project, some of that will happen at the end of the project, and some of that stuff is optional, and you probably be charged extra money if you use that optional. So that's what issues we have with the SaaS industry. I know it sounds complicated, but it's not an exam. You will not get any penalties, and the only way you can fail with that is just like not doing that and totally ignoring that. And I would say it's probably One of the hottest, it was the hottest topic a few years back, revenue recognition, and still revenue is like we saw in today's lecture, most of the SEC inquiries happen with the revenue recognition. So SEC, Securities and Exchange Commission, when it challenge the financials of some company, of some public company, they will challenge the revenue 40% of the time. And all other issues, I don't know, inventories, cost of sales, stock-based compensation, interest expense, debt covenants. It's like revenue stuff takes probably 5% of the financial statements if we take all revenue disclosures. Maybe even less, maybe 1-2%. But SEC questions it 40% of the time. That's because revenue is quite complicated and important topic, and we want to be on top of that in our career. Main principles of ISC 606. Okay, so here we have 5-step process. If you've been on the morning lecture and you go to the guidance, let me share the guidance with you. It is the same 5-step process which we have here in the article. So any mention of the principle in the article, we can reference that to the guidance. Okay, so identify a contract with customer. Let's assume that we are in a straightforward situation, that there was no oral contract with the customer and everything is straightforward. Let's not overcomplicate our stuff. We signed up for some paid service, assuming that is some QUICKBOOKS plus TurboTax. It's probably not real, so I completely made it up. But that's what we're trying to figure out. How do we recognize the revenue in that situation? So let's go back to our article. Identify the contract. Identify the performance obligations in the contract. So one contract can have many performance obligations. And in our example, performance obligations will be our promises to the customer. Here we have them. Okay, determine the transaction price. So transaction price will be like our total here, 6,000. Allocate the transaction price to the performance obligations in the contract using standalone selling price. So here we have some kind of approximations of the standalone selling prices, but we do not actually have one for tax warranty, and we will probably need check the guidance about not having standalone selling price. So that step assumes that you have standalone selling prices to the stuff. Recognize revenue when or as the entity satisfies a performance obligation. So let's go back to our example. Set up service price 5,000. So that's recognized. That's a simple service. That's recognized when we complete a setup, and we need to recognize the revenue. 5,000 when we do that. Sorry, not 5,000. The amount which we allocated to that component here from that price. So that will be a bit less than 5,000. Let's see what else do we have here. Subscription. So that will probably be satisfied month over month. Every month they use our subscription. We will recognize $100 in revenue. But not 100, the amount which we allocated from that bundle. Let's say, you know what, 6,000. let's say 6,000 for 2 years. Let's do that a bit more interesting. And we also renewal price. And we also make we will try to come up with something interesting about renewal conditions. Let's see what we have in the guidance here. Okay, and here is example 1. I'm finishing with example 1, and that will be, oh, it's huge. That will be it for today. Wind in your sales has developed a sales platform. So we have a sales platform that allows customer to track customer leads. So just some form of the CRM. The sales platform is accessed through the cloud. So cloud, hopefully you know what is cloud. That means that you can access it with the internet from anywhere. And it does not allow its customers to license the underlying software on premise. So that's a separate big topic, the licenses, software licenses. But it's good that we do not have a headache with that. Vince enters into a contract with the customer on October 1st. The contract permits the customer to utilize all of the features of the sales platform and store an unlimited amount of data. The contract duration is for 1 year. The customer will pay $100K subscription fee in 4 quarterly installments starting at contract inception. Even in this relatively straightforward example, there are many aspects applying the 5-step revenue recognition process. Identify the contract with customer. The customer contract would need to be evaluated to ensure that it is enforceable from both a legal and accounting perspective based on the guidance in ASC 606. Okay, let's us copy it here to the homework. It shouldn't be bold. That's interesting. For instance, Vince could need to consider whether both parties are committed to perform their respective obligations under the contract. Moreover, Vince would need to consider whether a portion of the contract may actually contain a lease for the right to use the company's server space. If so, that portion of the contract will be accounted outside of ASC 606. So we are now bombarded with issues. So first, they need to figure out if the contract is enforceable. So basically, if the customer can pay 1 quarter and walk away, then we will look at the situation differently compared to the situation when they paid, when they can actually be enforced to pay $100K. For the remainder of this example, we'll assume that the contract is enforceable and doesn't contain a lease. That's an interesting consideration. And let's assume that in our example too. Because if we don't, we may run into a lot of complications. Identify the performance obligations in the contract. Vince would evaluate whether the promises to allow the customer to use its platform and to store its unlimited data are separate or distinct performance obligations, accounting rules. So we can think that right to use the platform and the storage of the data might be 2 separate services. It's easy to understand. Let's assume that QUICKBOOKS, so for example, QUICKBOOKS can charge you 1 fee for using the platform for entering new transaction and using some minimal amount of data. But then they also allow you to keep the scanned copies of all of your invoices on the QUICKBOOKS. and then they charge you for more money for that. And that will probably be two different performance obligations. And similarly, in that situation, the customer can benefit from the goods, services on its own. Each promise is capable of being distinct. Each goods or service is separately identifiable. This means that each promise is distinct within the context of the contract. For instance, the premises are not significantly independent or interrelated, or one promise is not an input necessary to deliver a combined output to the customer. Let's assume though that Vince concludes that these two undertakings are not distinct, that they are actually inputs to fulfilling a combined promise of providing customer with a cloud-based solution. So basically we are saying that here we might consider these two offers in the contract as a one promise, as a one performance obligation, because if you do not have access to the data, you can probably not use the platform. And then also, even though there is unlimited data storage, the data storage is not sold separately, and you can probably not get access to that data storage anyways. So, and those two products are interrelated, so we need to keep that in mind. So it looks at the beginning that the contract was straightforward, but there is so many hidden issues. They're just incredible. Determine the transaction price. The transaction price seems to be fixed at 100,000. Nevertheless, Vince should consider whether its customer business practices or intent might involve granting concessions, discounts, rebates, or other credits that could vary the transaction price. This evaluation should be performed even if the contract itself is silent as to whether the customer might be entitled to or will receive these credits. That's also an interesting part. Even though we have a straightforward contract price, 6,000, we need to evaluate, should consider whether it is a customer business practice or intent to grant concessions, discount. So if we provide discount to every other or to most of our other customers, you might want to adjust your contract price. Allocate the transaction price to the performance obligation. So we concluded that there is a single performance obligation here. So that's basically one product, one service, SaaS. It's not two different services. So we basically allocate full transaction price. We allocate 100K adjusted for all possible concessions, discounts, and rebates. We allocate that price to single performance obligation. And recognize revenue when the entity satisfies the performance obligations. Vince is fulfilling its promise under the contract each day the sales platform is made available for the customer's use. Accordingly, as Vince is fulfilling its performance obligations, this customer is simultaneously receiving and consuming the benefits of Vince's performance. That means that Vince would recognize revenue from the customer contract over 1 year contract term, likely on a straight line basis. Sometimes, however, it will be more appropriate to recognize revenue in proportion to customer usage of the sales platform. This determination will be covered more in depth later in this publication. Okay, hopefully you will have enough to think through today and next week. So that's an example of what we will be working on with our example. I will add, over the course, I will add some complications to that example, and we will consider how those complications or conditions, how they will change our accounting treatment. Okay. Hopefully that was productive Q&A. Thank you everyone for coming, and we'll see each other next Wednesday, 9 p.m. Q&A. And have a great weekend. You are free from accounting for the rest of this week. Thank you again, and have a great time with family. Bye bye.